Hello, everyone. Welcome to the 15th episode of the Women Startup Leader Series. In this series, key female ecosystem players from Bangladesh and beyond will discuss facets of angel investing and all things startup. In this episode, we have Amra Naidu as speaker and Nisha Rahman, CEO of Bangladesh Angels, as moderator.
Welcome, everyone. Amra is the co-founder of Accelerating Asia and general partner at Accelerating Asia Ventures, an award-winning startup accelerator that scouts and propels the best founders in the region and provides pre-Series A startups with the resources and investment to scale their growth. She is the Southeast Asia lead for Impact Capital and Outgoing Curator for the Global Shapers Singapore Hub, an initiative of the World Economic Forum, and is the host and creator of the Doing Good podcast. She has been interviewed and featured as a guest author on industry blogs, including the Straits Times, Techcrunch, Reuters, and is a regular guest on 93.8 Now's national radio show and named as one of Harpers, Bazaar's Women Who Inspire Others. Amra regularly speaks about the intersection of business and impact, including at global events such as Money 2020, Singularity University Impact Challenge, and the Asia Corporate Sustainability Summit. Amra, you're a very good friend to us. We talk a lot, but it's good to have you in the setting. Welcome to BAN.
Thank you so much for having me. I'm really excited to be here.
Yeah, well, you're a veteran at podcasts. We're still learning, so bear with us a little bit. But looking forward
you're doing great.
but looking forward to the next hour of the conversation. We know of you, right? You're quite famous in the ecosystem. Lots of people know
famous.
What AA does. But it's always good to kind of just go back a little bit. So just curious, where did you grow up and what did you want to be when you were younger?
So not many people know that I was born in Zimbabwe. I grew up there until in my early teens before I then moved to Australia. What did I want to be when I grew up? I think there were so many things. I don't think I've ever been a person who really has known what they want to do. I've kind of just been exploring a lot of different things and fell into this. Maybe when I was a lot younger, I wanted to be a teacher. I know when I was studying at university, I really wanted to work for the UN. That I was just like, I'm going to be a diplomat. That's going to be my life. And then I ended up working in beauty and cosmetics. And I completely flipped and I was like, I'm going to work for Chanel in Paris. And here I am in Singapore doing neither of those things.
As life tends to go, right? And I guess it only really makes sense, as the famous saying goes, looking backwards. But yeah, it is interesting kind of looking up your background and how you got into ecosystem development, because there was a UN connection. So very curious about that, and if you could tell us a little bit.
So I had always wanted to work for the UN. I actually was going through my quarter life crisis at the time, and one of my friends, he comes from Singapore, and he was like, you know what, you should totally check out Singapore. I think you'll love it. And that just kind of kickstarted a sequence of events. I reached out to everyone that I knew here, and I'd never actually considered trying to get into the UN because I knew how difficult it was. I knew that you needed to have your master's, you needed to have all these kind of qualifications, which, I mean, to be honest, I really struggled to even graduate university. I hated studying. So the idea of doing post-grad and, doing more just really, really turned me off. So I reached out to a lot of people here in Singapore, and a friend got back to me and said, UN Women has an office in Singapore. They regularly take in interns. Why don't you think about that? So I jumped at it. I applied as an intern. And I even remember when I got the internship, they said to me, typically we don't bring on interns which have as much work experience as you do. So just so we're setting expectations, it's a 3-month internship and you're not going to get a job with us. I was like, it doesn't matter. I'm just, this is the dream. I've always wanted to do something with the UN. And yeah, that kind of kickstarted a sequence of events. Into my first month of my internship, my manager resigned. And because I was already working on the project, I had quite a bit of work experience. I ended up taking over her role, and 3 months turned into 3 years at UN Women. I was running their global social entrepreneurship program called Project Inspire, where we were working with entrepreneurs all around the world, which are trying to create impact for women and girls. And at the same time, I was heading up corporate partnerships, which is essentially fundraising. There's, funnily enough, a lot of parallels in the startup world and fundraising for a fund, fundraising for a startup, as there is for a nonprofit, essentially. And getting to see how a lot of different types of organizations look at impact, how they measure impact, and especially how these big multinationals balance impact with their business and obviously their marketing priorities.
And from there, you went to another accelerator called Murudi. And so that became the origins of what it is now, Accelerating Asia to an extent. But could you also tell us a little bit about Murudi and also the famous Bangladesh connection there?
The famous Bangladesh connection. That famous Bangladesh connection kickstarted all of our Bangladesh deal flow, I think, and all of our Bangladeshi connections. But I guess heading over to that accelerator program, so it was Murudi, which is backed by Telstra. And the program in Singapore was looking after startups across the region. So fairly similar to what we're doing now, probably a little bit earlier than what we're doing now. I had wanted to try out the startup ecosystem because, working with a lot of, I guess, self-identified social entrepreneurs, I realized that a lot of people knew they had a lot of depth in terms of the causes and the problems that they wanted to solve, but they had no idea about how to make them financially sustainable and scalable. And one thing that just, I guess, kind of really irks me is that you create these awesome solutions and then they die after, a couple of months or whatever, because there was just no coaching, there was no understanding of what it takes to make this sustainable. So that's kind of why I originally started looking at the startup ecosystem. Was I was thinking, here are all these people building awesome things, like maybe I could force impact on them in some way and get them to think about it. But what I realized at Murudi was that a lot of entrepreneurs are out there solving big problems and trying to create impact in different ways. They just don't know about the whole social impact space. They don't know the language. They don't know how to talk to impact investors or grants, organizations, foundations. So that's kind of what I learned there. That program ended up, in our last cohort before that program closed down. In a chance connection, I had coffee with a guy from Bangladesh. I met him through Global Shapers. He was traveling through Singapore, and he was like, there's this startup called ShopUp that you guys should really just take a look at. And at that stage, I think they had just started. We had applications closing that night. And I said to him, they sound like they would be a perfect fit for the program. You should get them to apply. I think literally a minute before the deadline, we got all of their documents that came through. And yeah, that kickstarted a really awesome journey, now being very, very close to the founders of ShopUp. I remember when they first started how nervous they were. They were definitely the most organized out of all of the startups out there. They had this big whiteboard which had all of the statistics and metrics that they were tracking, and they were so driven by moving all of those metrics forward. Every single week they'd be smashing those metrics. But yeah, that's the famous Bangladesh connection. And now we have a lot of companies from Bangladesh hoping that we can make them into a shop app.
I mean, yeah, quite a tale to kind of hit a home run on the first exposure to Bangladesh, right? But hopefully more are coming in. Some of them are in the room as well. And then, so Muridi kind of then went into what is the origins, as mentioned, of Accelerating Asia. Could you tell us, it's a good segue, could you tell us about the original vision and guiding principles of Accelerating Asia and what sort of lessons you took from some of these other experiences that you've had?
Yeah. So, I mean, Accelerating Asia was started because, at that time, Muridi was closing down, and we had a lot of people in the ecosystem reaching out to us, being like, you can't let this thing die. It serves a really important part of the ecosystem. Part of the great part about having so much flexibility with the program is that we got to develop a really awesome program that actually served a real need in the ecosystem. Obviously not, when you're running a corporate program, it's important to keep in mind the corporate that's backing you and make sure you're strategically tied to them. But I think, everything that we learned in how to run a good program definitely came from that experience. So when we were closing down the Muridi program, a lot of people reached out to us, and, Craig and I kind of, got together, and we were like, we know we have a pretty good idea about what it's going to be like to look for a job out in the ecosystem. Maybe we'll take an innovation role or something like that. But what if we did explore what it would look like if there was an independent accelerator program in the region? And I think you might have heard of JFDI. They were probably the biggest or earliest one at the time. And so we went straight to the founders of JFDI, and we're like, what went wrong? Tell us absolutely everything so we can, try and make this into something. So we gave ourselves a timeline of 6 months to try and kick something off, figure out a revenue model for an independent program, raise a fund, start the program as well. And thankfully, it all kind of fell into place as we were going along and building everything. I think looking back on it, we didn't realize we were building 3 separate businesses at the same time, a fund, an accelerator, and we have a consulting business as well. I think if someone had told me that, I probably wouldn't have done it. But I think, we were in the moment kind of like setting everything up as it needed to be set up, not really thinking too much, I guess, about, how much work it all was, but I think it was totally worth it. So I guess Accelerating Asia, we've now got 3 parts to what we do. We have the accelerator, which we're very well known for. We have the fund that invests in the startups that we work with. And the third part is we have a consulting arm that works with multinationals, governments, development organizations, and universities on how they engage with the startup ecosystem. And kind of everything that we do is that it's guided by the idea that we believe entrepreneurs are one of humanity's greatest catalysts for positive change. And we really believe that because nobody starts out building something wanting to do harm or wanting to do bad or anything like this. And I think there's a preconceived idea that business has to be bad, but that's not what business is. Business is solving a problem. And so that's kind of where we're coming from when we are, I guess, trying to build up the whole ecosystem and build up what Accelerating Asia is and all of our startups stand for as well. Yeah, I hope that answers the question.
Yeah, and I was always kind of curious about kind of that because we're also a fledgling ecosystem development organization in many ways, and we have our different streams as well. Your consulting practice, does that whatever money you make from that, does that go into the fund, for example, or is that more to kind of cover your OpEx?
So I guess the thing that we knew early on, at first, we were trying to think, okay, what if we get funded? What we'll do when we set up Accelerating Asia is maybe we'll fundraise like a startup does. Maybe we'll find another corporate backer or something like that. But then we realized, when we do that, we are fundamentally not aligned with the startups that we're working with, because we're always going to have the needs of someone else, that is, I guess, using Accelerating Asia or using the accelerator as a vehicle for whatever their goals And so then we were like, okay, well, we need to find a way of keeping this financially sustainable. And the biggest problem with independent accelerator programs is when you are investing in early stage companies, the exits can't come quick enough in order to sustain your operations. And so you need something to plug that initial gap. And that's where the consulting arm came from. And that's actually the first, I guess, business unit that we started out with, was the consulting arm, because we knew if we could get that up and going, everything else follows. Yeah, so that's essentially how it works. The consulting arm drives short-term revenue in order to keep, the accelerator program going. We do put money into the fund as the GPs, and that is from, money that we have earned from the consulting work. But we just really believe that it keeps us fundamentally aligned with the startups, in that if they succeed, we succeed. And so we want to do as much as we can to make them succeed. Yeah.
Makes sense. And I also wanted to, take a deeper dive, and I know iFarmers also in the room, but I found this quite interesting about the thesis of the fund and this idea of the missing middle. And could you explain to the audience, where you guys were coming in with that, between the traditional accelerator versus the traditional VC, where Accelerating Asia fits in?
It's really funny. And, when I talk about the impact world having so many parallels with the startup world, like I mentioned, fundraising before as a nonprofit is exactly like fundraising as a startup, or fundraising as a general partner, getting, investors to come in. It's the same with the missing middle. So the missing middle is a concept that is actually really, I guess, proliferated in the impact world, in that there are a lot of small grants, funding opportunities available. And then there are a lot of massive amounts of money, like institutional money, that's there. But there's nothing really to bridge organizations that are maybe trying to jump from one to the other. And so what ends up happening is the smaller organizations, like if we're strictly talking about the nonprofit or impact space, end up doing what we call the competition circle. They keep moving around to those smaller competitions, like, give out 25K grants or things like that. Or they are moving to small, 5K grants or sponsorship opportunities and things like that. And they never fully bridge the gap and get over to the institutional side, because they simply don't have the organizational capability to take in $1 million grant, or 500K. 500K most organizations can take, but once you get into those 7 figures, it's really difficult. And we saw the exact same thing happening in the startup ecosystem. There's so much early stage ecosystem support out there. You've got, all these government organizations, you've got a lot of, even like foundations and things like that running entrepreneurship programs. And then on the other end of the spectrum, you have all of these massive funds coming into this region because there's so much opportunity here. But the startups are not prepared to take that money. And what does it mean to take that money? It means that you need to have your house in order. A lot of people think, yeah, I could spend a couple of $1 million. I think everybody could spend a couple of $1 million. But you need to have all of those trust indicators there before someone is even going to think about giving you 7 figures. That means good governance. It means employment contracts, things like that. Just having your house in order is kind of the first step to that. And then it's like, okay, if you do get that money, what are you going to do with it? How are you actually going to deploy that effectively? And so that's kind of what we focus on with our program. I wouldn't say there's a curriculum to what we do, because every startup that we work with is unique. The batch is very curated as well, depending on all the different startups that are applying and, that get shortlisted. And they also have different gaps in order to get to that stage where they can take in that bigger funding.
That's a great segue to the accelerator itself. And that's where I was also quite curious, because you must look at thousands of applications in any cycle, and you do multiple cycles, obviously, throughout the year. And so I'm just curious, at how, obviously you can deeper dive into what you're looking for, and also, and what are the, I mean, how do you quantify such a diverse, pipeline, right, across regions, across themes, across sectors?
Oh gosh, how do we do this? It's a massive process. I'll say that. We're actually just about to change the process slightly so that we can start taking rolling applications, which I think is going to be a massive game changer with how we're working with the different companies. One of the challenges with doing a batch-based approach is that, maybe a startup's not ready when you first see them, and then the next cohort opens 6 months later, and they're past the point where they'll come into the program. That's how quickly everything moves. So yeah, we're starting to do experiment with more rolling applications and working with startups earlier on as well, so that we can identify good quality deal flow at a much earlier stage, that we can put them straight into a program as they're ready for it. So that's kind of one side of things. In terms of how the whole process works, that was your question, right? How the whole process works. Okay, so we take applications. Typically, the first round of applications, many startups kind of look at the application form and they're like, well, that's long. It's a long application form. And I think it's long for two reasons. One, if you're serious about it, you're going to fill it in, right? So it already eliminates the people who are just, randomly submitting applications to a whole bunch of different things. That's kind of the first filter that not many people really think about. The second is that as part of the application process, we're asking questions that a VC is going to be asking. And if you can't answer those questions, then you're probably not quite at the stage that we'd be looking at. You should be able to answer the questions to a certain extent. We're not obviously expecting super polished answers. I think a lot of people think, we're expecting VC quality answers when they come through, but that is the whole point of the accelerator program. When we're looking at startups, we're looking at how can we help them get from one stage to the next stage, which is institutional funding. So after they've filled in the application form, there's usually an initial automatic review. And that is anybody that hasn't filled out the application form properly is already disqualified from getting any further. And then there are certain metrics that if you don't quite hit those, then you might not make it into the next round. And that's because we know you are way too early for us. After that is a full application review. And that is pretty much everybody in the team literally reading every single application, watching all the videos, going through all the cap tables and everything that we've been sent. Every application gets 3 pairs of eyes on it. After that, we'll select about 50 companies where we do an interview, and that will be about a 30-minute interview that we have with them. And from there, we take probably around, the top, 25-ish companies who will go into something called Selection Week. Selection Week is where they meet with all of the investors from our fund, some of the VCs that we work very closely with, people like you, Nijor, from Bangladesh Angels, some of our very good partners that we know co-invest with us, as well as some top quality mentors. So they probably have anywhere between, 10 to 20 meetings during that week. And the idea is to give them some value as well. Even though if they may not get selected for the program, at least they met, at least 10 awesome people that they can then go and have a relationship with outside of Accelerating Asia. That's kind of the whole purpose of it as well. But we take the feedback of everybody that they meet and then make a decision on who are the 8 to 10 that then get invited to join the program. In terms of, I guess, the things that we look for, traction. So revenue is probably the best form of traction. Around 10K is the average revenue coming into the program. And after that, if you don't have revenue, that's okay as well, because maybe you have a good amount of users on your platform, Maybe your revenue's a little bit low now. You need to, we see an opportunity for you to tweak your business model and really scale up the revenue side of things. So I wouldn't be too worried about not having revenue. And then the founding team, I think that's the most important part. Happy to go into that in more detail, but we do a lot of due diligence on the founders themselves and coachability and I guess how they know each other as well.
I'm also curious about the impact element, right? So, how important are, let's say, SDGs in this conversation or mix? How important, for example, is gender lens? And maybe if you can define also how you look at gender lens as part of your, I guess, curation.
Yeah. So something I learned from working for, the UN and working with a lot of different types of impact startups is that most people don't really know how to measure their impact, especially at this stage, or maybe they don't even know about impact at all. Maybe they're just out there solving a problem and they don't fully realize how it translates to the impact world. Because I think, and I've probably said this too many times, I think for all its talk about being inclusive, the whole impact ecosystem is exclusive. Because the lingo that is being used, it's so difficult for people just to, understand what's going on and then be like, yeah, I'm making a difference too, and this is how I'm doing it. It's really difficult to just, jump in and understand what's going on. So we don't actually look at the Sustainable Development Goals. We don't look at impact when they are first being accepted into the program or even being screened. It's not a filter that we use, put it that way. We have hard filters on, coachability and, the traction and all that kind of stuff. Those are, I would say, hard filters. And then maybe softer considerations about, whether or not they're making an impact. I think we just naturally skew towards the impact side of things because of based on where we are in the world, there are so many big problems to be solved in this region that naturally entrepreneurs are at the forefront of solving those problems, and naturally they're making an impact. So impact is embedded into their business model. So I wouldn't say, we go out there and we're like, hey, this startup ties to this SDG or initially, as they're applying in the program, or, they must be working on some kind of impact thing. It's more about finding the right founders, the right types of business models, and encouraging them to think about impact and embedding it into their business and being able to communicate it. So I guess that's on the impact side of things. On the gender lens investing side of things, so 65% of our portfolio are what we would consider a gender lens investment. And unlike many funds who simply define that as an investment into female founders, we have a more broad approach to it. And the reason for that is because, from, I guess, a lot of work at UN Women, it's not just investing in female founders that is going to make an impact on women and girls around the world. Men are obviously very much part of creating that impact as well. So there are kind of three types of investments that we would consider a gender lens investment. One is an investment into a female founder. The investment rates into female founders is crazy low. It's absolutely ridiculous how low it is. I think it's 10% of all VC capital goes to female co-founding teams. So that means there's at least one woman on the co-founding team, 10%. And even lower than that, I think it's like 2.3% goes to female only founders. So it's absolutely tiny. The second thing that we look at is the product or service primarily for a female audience? That's kind of the second criteria. And then the third is it an investment into an industry where women and girls are typically underserved in the supply chain? And so a good example of that is manufacturing, agriculture, as two, examples of where women and girls are typically underserved there. And the thesis behind that is, if we can invest in great founders that are, uplifting the whole industry that they work in, and looking after their stakeholders, then naturally women and girls benefit from that. Yeah, I think that hopefully covers all.
Yeah, and that's quite comprehensive, and thank you. And going back to that point about impact, and obviously maybe that's not the particular criteria in the beginning, but trying to infuse that as part of, I guess, their storytelling, the approach that they do business. That's one value addition of the program. I also see, for example, that it's designed to kind of 10x growth and fundraising in a very short amount of time, 100 days, right? And so just curious, what are the goals of the program for you guys as these companies come out? What are you helping them to do, or what are you looking to help them do?
Yeah, so fundraise is typically the goal that everybody comes in with. Fundraise, they want to close their rounds. Most of them actually close their rounds during the program. And then the other part is revenue growth is the second thing that they're all super hyper focused on. I think the third thing that is related to both revenue and fundraising is things that nobody likes doing, but actually moves the needle a lot more, which is all of the good governance things that we spoke about earlier. You're more likely to raise investment quicker if you have all of your investment documents ready to go, if you've got your data room ready to go as well. And that means including all of those, contracts or, things that you can show investors there. So that's kind of the first thing. The second thing is being able to effectively communicate what you do. So we spend a lot of time working on pitches, pitch decks, email communication. You wouldn't believe how many, startup founders come to us and don't know how to ask for an introduction or follow up with people. So etiquette as well. Because I think at the end of the day, when you're an early stage founder, there's not much else that people can look to. Yeah, you've got your business and everything like that, but it's too early to really determine whether that is going to be a success or not. What all of these investors are looking at is you, the founder. Can you show me that you know what you're doing and that I can trust you with my money? And all of these things that we're working on, communication, good governance, all of that kind of stuff, it's a trust indicator that you're throwing out there that, yes, I'm organized, I'm prepared, I'm ready to take this to the next level.
Makes a ton of sense. What about for the entrepreneurs in the room, what are the typical funding funding structure and terms that you seek as part of your cohort?
Yeah, so we invest through a safe note. We do about 50 to 100K upfront investment. And then we have the opportunity, or I guess we would like to obviously follow on or double down on our investment in some of the top performers. That's kind of how the investment side works. We're quite flexible on the terms, really, to be honest, compared to a lot of other investors out there. We're happy to lead. Or if you already have a lead investor, we're happy to, join the existing round as well. But yeah, I think it's pretty straightforward. The whole idea for us is to try and make it as quick as possible.
And the ones, so there's a baseline level of funding, I guess, being part of the program, and there's also the top performers who get additional investments. And just curious, what do those? Obviously, there's so many different types of companies, but generally, what are the traits that they exhibit during the program that gets them to that level of, I guess, being the top tier performer?
Yeah, they're organized. They are super organized. They have everything ready to go, or when you ask for something, they put it together immediately. Because the thing is, we're not asking for documents, or we're not asking you to do something just for the sake of it. We're asking you to do something because we know it's going to take you to the next level, and we know it's going to make it quicker for you. If we go back to this Shop Up example, the reason that they were able to fundraise so quickly and from so many great investors was because they were on the ball all the time. They had everything ready to go. If you talk to a thief about how he fundraises. He's a machine with how it works, and that's exactly how you need to think about it. Is that everything is a process. It's how you would look at, sales or growth or anything like that. It's a process that can be broken down, and can be made easier for you, so you're not like spinning your wheels every time that you're trying to do something. So I think characteristics is that they're super organized, super quick to get you something when you need it. And then they also ask questions. They're very proactive. If they need something from you, they'll come and ask you. If you think about it from a founder's perspective, right? You have just raised investment, you've joined the accelerator program. That program only goes for 3 months. You have 3 months to suck up as much information, resources, networks, take everything absolutely possible that you can. Because after that 3 months, yes, you're still part of the portfolio, but you're an alumni now. You're never going to get the accelerator program back. You can't do that again. I don't know, maybe you can. We haven't actually had anyone ask us if they could do the program again. But it's such a short program, and I think just making the most of it, people kind of get absorbed in their own worlds and things that are going on instead of looking at the opportunities and the bigger picture. So I think that's some of the characteristics.
Thinking also about kind of as you move forward, right? So you start with this first fund. Now you are in the process, or you've launched your second fund. That's also curious to me. As VCs kind of go to these different stages or different funds, are there particular sectors or trends you're excited about? What would you say is the biggest difference between, besides size, maybe, what's the difference between Fund 1 and Fund 2?
Difference between Fund 1 and Fund 2. Honestly, not much. I think we streamlined a lot of different things, like from an investor perspective. The experience is a lot more professional than me and Craig rolling out there trying to figure out how to fundraise for our first fund. We have definitely come a long way since that one first launched. So I think from a startup perspective, there really isn't much difference in terms of how we invest and the sectors that we're looking at. From an investor perspective into our fund, there's a massive difference in terms of all of the processes and everything that they're being onboarded onto. A lot more professional. I think we've also gotten better, and this is probably through the accelerator and having experience doing this for a few years now. We've gotten better at all the paperwork side of things, with moving our founders through the process a lot quicker. So that's probably the biggest difference. Once they get into the program, there's a much faster movement or momentum in actually getting them through all the paperwork that we need them to get done. For industries, I wouldn't say there is any difference in how we're kind of looking at the different industries. We're still sector agnostic. I would say there's a difference in the types of companies that are applying to the program now. During the start of COVID, we had a lot of ed tech companies coming through. Then, as COVID was kind of going on, probably a year into it, we had a lot of health tech companies come through the application process. And now we're starting to see a lot of different types of mental health platforms and lifestyle platforms. So I think you can definitely see, the startups that are coming through tie very nicely into what's happening globally in terms of the different trends there. I don't know if that answered your question, because we're still very sector agnostic.
Right. But it does seem like you said, I think the approach, the biggest difference is probably the approach or the standardization, as opposed to necessarily in any kind of because you're sector agnostic by design, right? Yeah. Another question, and once again, the landscape is changing. There's a lot, the level of activity of funding in the Southeast Asian ecosystem is changing. How are you thinking about, how does that relate from an exit standpoint? Is it still mostly about secondaries for you guys, or?
Yeah, I think realistically, but when I talk to investors, um, I'm very, it's funny, I'm, in the startup ecosystem and fundraising for a fund, which is obviously a very high risk investment, but I'm quite a risk adverse person. And so the first thing I tell investors is that, you need to expect that you're not going to get your money back. It's highly volatile, this type of investment. It's so early as well. There's so much beyond the startup's control and beyond the founder's control that could happen. So yeah, I think, ideally it would happen, once they're raising their much later rounds, we'd probably be cleaned off the cap table at that point. But yeah, I think we have a few more years before we're going to see something like that happen.
Makes sense. I also want to just kind of briefly touch on Bangladesh, right? Because you guys are actually one of the biggest foreign or local early stage investors in the ecosystem. I think at last count, I think it was 12 or 13 companies, and I'm sure there's more coming.
Yeah.
And I think we've been a part of 4 or 5 together. And one thing I still remember, because we were catching up in Dhaka maybe 2 years ago, before the COVID times, and Nesh, your colleague, was talking about how so many of the companies that you're seeing and working with in Bangladesh, they might have their run rates relative to valuations. There's almost like a gap, right, where they're exhibiting series, pre-series A type run rates, but they're having to raise at seed stage valuations. And I wonder if is that still the case, especially as your cohort has matured, and whether or not that still plays out when it comes to the discount that Bangladeshi companies have to give.
Yeah, for sure. I would say it's definitely still there. I mean, I think Bangladesh is for us, is a very exciting market. There are so many really great founders there. Obviously, it's a massive market. There's so many opportunities, things that you already know, so I won't repeat them. But it's still a market that most investors are just not comfortable with yet. They don't know. It's still very early for them. And so I think until that changes, until we get more institutional capital, testing out the market, doing their first investments in there, then we're going to see things start to change. But I remember, when I came to Dhaka, some of the startups that we were meeting there, I was looking around, I'm like, these are legit operations. You would never see this in a Singaporean company, that's raising at the same valuation. At that valuation, there'd be 2 founders and just an idea. They've got absolutely nothing to show, compared to startups in Bangladesh that are full legit businesses with like 50 employees, and they've got their logistics and their tech all sorted out. But being able to sell the whole Bangladesh story is a big challenge for many of the founders that we work with there.
And I mean, it's the keyword being institutional, right? Because I've seen that as well, kind of in my tenure. Is so many companies are. I think angel funds are much easier to get these days, or than it was maybe 3 years ago. Obviously, still has some challenges, but I see a lot of companies being stuck in this seed stage trap of. You mentioned the competition trap, so that maybe that's what it was before. But these days, they keep having to raise seed rounds and extensions of seed rounds, keep going to angels, but they can't quite crack that institutional level of funding. And
Yeah.
obviously one of the key things is we got to work on the Bangladesh story. Are there other things that companies, or other advice would you give to companies to be able to break out of that cycle?
Yeah, I mean, I think, yeah, there's the Bangladesh story, but there's also a lot of impact investors that would happily, I think, invest in Bangladesh if they knew more about it, right? And maybe it's not VC capital that we should be going after. Maybe it's some kind of blended finance that helps showcase the Bangladesh story, and so that these private sector investors can kind of watch from afar, as they're currently doing, but still moves the ecosystem forward in some way, because it's kind of at this awkward phase right now where the institutions aren't really coming in, but it's not much is going on there. Like you said, there's a lot of angel funding, but they're raising small rounds. I think there's that. There's also making Bangladeshi founders more international, because, and as bad as it sounds, these investors, and it's the same with female founders, right? We talk about a gap between female founders raising and, all of those stats. But the reality is when you're investing at an early stage, investing in general, people invest in what looks familiar to them, who looks familiar to them, safe to them. Everybody has their bias. And as much as that, there's a lot of talk about trying to eliminate all of these kind of bias, I've kind of come to the point now, and that's part of the reason of starting this fund, and how we have a very strong focus on getting female founders in and having such a diverse cohort as well, where I'm like, you just got to do it yourself. You can't rely on these institutions to come in and wait for them to do that. At some point you need to just take control and do it yourself. And so that's how I feel about Accelerating Asia's fund. Is that we look at all of these opportunities and we see these kind of gaps, and it's like, literally, if all we have to do is put the Accelerating Asia stamp on a company and it makes them look international, we'd stamp as many companies as we could. But obviously if we can't do that, we don't have the capacity to do that. But I definitely think that there is more space and a lot of different types of opportunities to make Bangladeshi companies more appealing internationally, and how founders communicate, but also the types of funds or things like that that invest in them.
I think that's a good segue to maybe hearing from some of the voices in Bangladesh. We'll have time for maybe a couple of questions. So feel free to type it in the chat. So the first one is, what's your experience, if any, working with LPs and investors investing from Europe to Asia? Yeah, what's been what kind of experience and what sort of questions are they asking?
Yeah, we definitely, we've spoken to a lot of different types of LPs. I mean, a lot of the LPs that are looking at Asia and especially looking at early stage investing probably already have some kind of ties to the region, or maybe they're from the region, maybe they've done some work in the region as well, so they kind of already know the story of Asia. They know the opportunities as well. I think in terms of, outside of that, Asia is still a very strong focus in terms of impact funds. And so that has been a really interesting angle as well, as especially government funds who are trying to deploy aid funding in this region. So there's a lot of opportunity there. But I don't know if I have anything kind of specific that wouldn't apply to maybe investors from the US as well.
Makes sense.
Top 3 things a founder should look for when taking money from an investor. Well, just like an investor does due diligence on a founder, I think founders should most definitely do due diligence on an investor. I think especially when you're fundraising and you're new to fundraising, you forget to do that. You want to take, and especially if you're in kind of tight position, you want to take any money that you get. But that could be the worst position to put yourself in, because an investor can influence your business in so many different ways. So one would be, I don't know, are they active? Are they, do they have an active portfolio? Are there any founders that you could speak to that are actually in their portfolio and that, see if they've had a good experience with them? The second is, do they even have any money? What you'll see is a lot of different types of VCs or small funds out there which are actually still fundraising for their fund, and they're using the initial conversations that they have with founders in order to kind of sell their investors into the fund, and they have no intention of actually deploying the money anytime soon. So one is, do they even have money? And then as a follow-on to the money side of things, it's how much of their annual capital that they plan to deploy have they already deployed? Because if you are coming in, now is October, they've fully deployed for the year, they're not planning on doing anything, at least it sets expectations that you're not going to get any money this year, maybe next year, but at least you can start the relationship, maybe some of the due diligence process. And the third thing I would check is their reputation. Just do all kinds of, I'm sure you can Google them, you can find out the general partners of the fund, find out all of the people working for it. That's assuming that you're looking for an institutional investor, but I think it's equally important if you're doing that for an angel investor as well, especially at the early stages. But yeah, I would just do a lot of due diligence. At the end of the day, you are making a business transaction, right? They're getting something for the money that they're investing in you. And you need to make sure that they're not going to become a headache, later on down the track.
This isn't a question, but I just love the anecdote from Fahad at iFarmer, because I recall, I think he and Jamil were some of the, I think, top performers in that cohort. But the first time I heard about and learned what a data room was during the time at the accelerator. I still remember me and Jamil looking at each other and thinking, what is a data room and why don't we have one? So, so there's definitely,
yeah.
I love that.
mean, you wouldn't believe how many founders come to us and don't have employment contracts with their own business, or they don't know some really common terms like reverse vesting and things like that. So yeah, Fahad, definitely you're not alone.
I think he's proven to be a very capable study. I know iHarm is doing exceptionally well, and thanks for that insight, Fahad. I'll just finish with a few reflection questions, right, as it relates to the theme that we're trying to organize. And I do remember, Craig kicked us off last year, and it really got us thinking about how do we help more women entrepreneurs, but also create more women angels. So yeah, the first question from your experience, what specific barriers prevent more women-led startups from being funded? Yeah.
I find this so hard to answer because I've done obviously so much research into it, all my time at UN Women working with entrepreneurs, now, on the other side, funding. And I can't put my finger on it. I can't see, like, if I just solve this one thing, it's going to be a game changer for female entrepreneurs, because there are so many different nuances to the whole thing. I think if I look at some trends, or some common things that I've seen, one would be that, and I mentioned it before when talking about Bangladeshi companies raising institutional capital, is that people generally have a bias and they're generally going to invest in things that they're comfortable with. And if the investment landscape is dominated by men, then I don't even think it's it's definitely not a conscious thing. It's just a natural thing. You gravitate towards, people who think like you and who your social circles are and things like that. So I definitely think that is kind of one side of things. I also feel like, a female investor is going to ask different questions maybe to a male investor, or any investor, any investor that comes from any kind of background. And this is why it's really important to have diversity in terms of, who's making the decision about the investment, not just from a gender point of view, but from every point of view. You are more likely to find, potential red flags in a company if you have so many different people coming from different perspectives on it, right? Rather than just having your siloed view. So this is not just limited to gender. I think one is obviously getting more female investors out there, and I think that would just kind of speed things up a little bit more. I think the other thing would be whether VC funding is even appropriate for all startups, and the types of businesses that different personalities and different profiles go to. And we've definitely seen, especially working for UN Women, that more women are likely to start up social enterprises than men are. But when we look at the startup space as well, women are starting businesses at the same rate as men, but they're not getting funded. So there's definitely a gap there, because it's not about women starting businesses. Women are just as entrepreneurial as men. Yeah, I've spent a lot of time about this. We could probably have a whole other episode just literally going into all the different trends. I haven't figured out a solution yet for this, unfortunately.
We'll try to figure it out together. I think that's the takeaway.
Yeah.
Another, another, we're about to, launch in the next couple of months our kind of women's network. And once again, Craig was actually an inspiration for this, because we talked about creating I don't know if that's the right word, but safe space, right, to for more women investors. But yeah, also curious, for you, and I'm sure you have a lot of colleagues in this space who are getting involved. How do we engage more successful women to become first mentors into startups, and then second, potentially investors into startups?
Yeah. So I've recently started speaking to a lot of female angels and women who want to start investing into startups as angel investors, but they haven't done anything yet. And what I've realized that I think is a little bit different from the male investors that we speak with is that women seem to be a lot more community oriented. So it's more about word of mouth. If I need to get, a couple of female angels on into a deal, I need to go and physically meet all of them, a couple of meetings, kind of answer all their kind of questions, answer all these background questions as well. They really want to know more about the people that are involved in the whole thing. And I found that quite different from some of the male investors that we're working with. Who maybe it's because of experience, but they cut straight to the chase. Questions that they'll ask in the first 10 minutes of a conversation, I may get to in maybe an hour coffee with a female angel. So it's very different dynamics of working with different types of investors. And so what we started to do is create just a simple WhatsApp group for some of these women who are interested in being involved. And it's just, they can ask in there about the deal. They can ask any, dumb questions that they have, which are really not dumb questions at all, because we get the same questions across despite gender. It's not a dumb question. But it definitely does seem to be a perception from women. If they don't know everything, then, they're not as confident. So how do we create more female angels? I think we need to showcase more women investing and showcase, that it is just, it's a thing that women can do too, you can't be what you can't see.
And there's the keyword community. So I think that's also a good challenge for us to build. And the last question, for those who are in the room and for those who will be listening, there are young women who aspire to be someone like you, right? Be an angel, be a VC, be a tech entrepreneur. Would you have any advice that you would give them that work for you?
Yeah, don't think of your gender, just do it. I think the moment that you start thinking of yourself as a victim, you're already coming from, or someone who, if we're talking about, okay, I think it's like only 2% of women are actually VCs, like as in general partners of funds globally, which is absolutely insane. It blows my mind, because you don't need to be a rocket scientist to do what I'm doing. Like it's not that difficult. So I think it's just a matter of, I always feel like you need to come from a perspective of, it's not about your gender. It's not about anything. It's about your capability. So just, going out there and doing it. And, maybe you're going to have bad experiences, maybe someone's going to harass you or say something because you're a woman, or say something because you're brown, or whatever they're going to say. But you can't assume that that's the case, and you can't take that on, because that's their problem, not your problem. So yeah, I think my only advice, just go for it. Got nothing to lose.
Amra, we're such big fans of what you guys are doing. It's always a pleasure to have you on. Thanks a lot for spending part of your day with Bangladesh Angels.
I'm really happy to be here. Thank you so much for the opportunity.
Likewise, thank you so much. And thanks to everyone in the audience. Wish you guys a great weekend. Thank you so much.
Thank you.